Welcome back to We Talk Money, Recession Edition. Guys, are we going into the depths of hell, or is this just a little bit of a pullback in the markets?
Sell everything. Go to cash. No, I'm kidding. Yeah, we're in a bit of a dicey period here for the market. A lot of uncertainty, a lot of policy uncertainty coming from the U.S. administration, and I don't think we're going to be out of those woods for a while yet. So I think we're in for chop and volatility, but that's going to create opportunities as always. So yeah, I think ultimately anyone who says they know exactly what's going to happen and that they have the crystal ball is full of shit. Sorry to use that language, but yeah, there's a lot of uncertainty out there. I don't think it's time to panic though, and so I think ultimately there's still a lot of things going right with the overall economy and the market. So I'm still optimistic, but we're gonna have to get through some chop periods for sure.
It's really weird because over just the past couple of weeks, on the Bitcoin and kind of crypto front, prices did a pullback to the 200-day moving average on Bitcoin, but you would think that we are in the depths of like a multi-year bear market just based on how market sentiment feels. Just looking out there and hearing from people, it's like the depression, the sadness, the fear. It's like it just feels so heightened. And I guess like part of that comes from the fact that meme coins are down massive. So yeah, a lot of noobs, a lot of dumb money and gamblers have lost over 50% at a minimum in the meme coin market. So we can talk more about that. But maybe that's where some of the negative market sentiment is coming in. Nikki, what are you seeing on like the consumer side?
Well, I think we need to like take a step back and keep kind of unpacking this S&P 500 move, this move in Bitcoin. There are a lot of things kind of leading to this sell-off. First of all, I think I messaged you guys privately weeks ago, and I was like, "Hey, I think a correction is coming. I feel like the market's about to roll over." Do you guys remember that when I sent you that message?
Absolutely.
And yeah. I kind of sensed the heaviness that it was hard. The buyers looked good for a while, and they were definitely stepping in, but the valuation questions that I had, that's kind of what led me to, man, I just don't know how this market is just going to keep trucking higher. Are we going to, 23 times, 23 PE, 24 PE, like, are we really going to be getting to these levels? And this market's just going to keep going? And I don't know, it didn't feel right. It didn't sit right with me. And I was thinking that maybe this time was coming. We hadn't touched the 200-day moving average in a while on the technical side with the chart. A lot of times how I kind of gauge where we're at with price action is I do look at that. I'm like, when is the last time we've even touched the 200-day moving average? If valuations are high, or on the higher end, should I say, I'm sure we've seen worse, but on the higher end. And if we haven't touched the 200-day in a while, that tells me there's a lot of bullish momentum there. And will we see earnings to give us, the possibility to go even higher? And yes, earnings growth for 2025 is actually expected to be pretty good, double-digit growth so far. But I'm starting to see some weird stuff happening that's not really aligning with the earnings growth expectations for 2025. Speaking towards the consumer and different types of consumer discretionary corporations that are out there, I kind of dove into a lot of those names to just see what's going on with earnings. And what I'm noticing is really good companies, even companies like Abercrombie and Fitch, that's been on fire and that's had double-digit, growth, comps and revenue growth, and just been killing it with the Abercrombie and Hollister brand. They came out today with crap guidance, or guidance that I don't think the market was really expecting. Granted, this is still a very affordable company that I think has a lot of value behind it still, but the guidance was the issue. There have been other retailers too, like Levi and a few others, that the guidance just looks not great. So it makes me question in terms of like, where are we going with the S&P 500 from here? Now that we've tagged the 200-day moving average, it's like, okay, do you short and hope that, and think we're going to 5,000 in the S&P 500, or are we just going to consolidate here, and flop around for a while, like Trav mentioned, with all this uncertainty? That's kind of the big question: is will the earnings growth expectations that we have right now be able to hold this market up? And it's starting to look like maybe not. Trav, I don't know if you have any follow-up thoughts to that, but I know in the community, somebody had mentioned 5,000 S&P or 500 on SPY, and you just mentioned that offline earlier, and I didn't think it was something we'd be looking at. I kind of was of the mind, I don't think that's going to be happening. So I'm curious your thoughts in terms of downside potential from here.
Yeah, and Trav, I want to pull up the tweet that you sent a few days ago, where you were showing the charts on GDP, like kind of trending down. And I know you've been talking about like the subcomponents, and maybe what are people looking at here, and how does this relate to tariffs, and yeah, just your overall view of this whole situation.
Yeah, for sure. This is something that has definitely freaked people out in just the last week or two, because we have this Atlanta Fed GDP Now number that is a mathematical model that looks at a bunch of different economic indicators and spits out what it thinks the current quarter's GDP growth is going to look like, real GDP growth. And that was sitting at between 3 and 4% when we started the year. That looks great. That looks, in line with what we've seen over the last couple quarters. All is hunky dory. And then all of a sudden, in the last 2 weeks, that 3 to 4% real GDP forecast has gone negative. It's almost at a negative 3% number now. And so all of a sudden, it looked like we're getting 4% real GDP growth in the first quarter, and now the model is saying, oh shit, it might be negative 3%. So that starts to push us into potentially, recessionary territory. But there's we really shouldn't freak out too hard about this number for a couple of reasons. One, there's the subcomponents within them that are really telling the story here, which is the biggest driver of that big swing from positive to negative is the net imports number. So what's happening is we're seeing a lot of manufacturers importing a ton of goods into the U.S. Ahead of potential tariffs. And when that happens, in the GDP calculation, net exports adds to GDP and net imports subtracts from GDP. So when you're getting a ton of extra imports, even if it's just a short-term issue, that's going to weigh down GDP. So that's the biggest driver of the negative swing that we've seen. And it's really just a one-time issue. So it's not something that would create a persistent decline in economic activity. So it's the policy uncertainty that's driving that. Now, we are also seeing a little bit of a downtick as well in residential investment, housing, and then also in consumer spending. And the consumer spending one would be the more concerning part of that decline. And so that comes from a very weak January figure for spending. Now, some of that could get blamed on weather. We had, the fires out in California. We had cold weather in various parts of the U.S. that depressed economic activity. Nikki, you mentioned a lot of the retailers were saying that on their conference calls, A&F, Target. Those are good examples where they had a good fourth quarter and the numbers were actually quite good. But then when they said, hey, how are things trending for Q1? Well, it actually looks a little bit weak. And, we think things will improve this year, but that first month of the year that we can see has been a lot slower. So is it just weather issues? Is it just, is it uncertainty over what's happening with policy at the federal level? We don't fully know. I do expect February and March hopefully to bounce back a little bit, and hopefully we see this GDP number bounce back in positive territory. So I'm not, like I said, not panicking yet. But, we have to acknowledge that we went from things looking really great in both data and in financial markets to now things have a lot bigger question marks surrounding them.
Trav, to add to that, piggyback on that, the jobless claims also rose pretty significantly in January too. So the question is this a new trend, or was January kind of a one-off? So to be determined on that. But it's very possible that maybe January was just a bad month, and, retailers were seeing some things that were concerning to them. But, we had the fires in California, weather, a lot of mentions about weather. So yeah. Is this a trend, or are we going to just see this as a one-time blip on the radar? Of course, when you combine that with like the inflation rising, but job numbers look okay to me. They're not like banger job reports, but they seem okay. So I think that, between the GDP estimate, between the jobless claims and the things that could have affected that could be definitely one-time things, I think that it's possible people are freaking out that over potentially nothing here.
Yeah.
So something to think about in terms of what this dip is going to lead us to.
And we do have a big unemployment report for the month of February that comes out this Friday for the U.S. as well, which, if things swing a particular way, could really influence the direction that markets head here over the next few weeks. So that's another thing that sits here on the horizon that's going to be a very big data point for us.
So last night we saw the State of the Union, and it was an interesting one. I kind of feel like I'm watching like middle schoolers like kind of battle it out. And, but there's, I think, some positive things happening. There's some risk. Obviously, investors are looking at the tariff situation as probably one of the most immediate concerns. Would you guys agree with that? And if so, like, do you think this is something that's sticky, or is it going to get, kind of quickly resolved? We're even as of like just a couple hours ago, we're seeing headlines like Trump to delay the Canada and Mexico tariffs on autos for a month, right? So it seems like, there's like a lot of barking going on, and then like some kind of quick changes after implementation. Or is this something where it's like, no, yeah, this is really going to mess stuff up, and it's going to, push inflation higher, even though we're projected to get 3 interest rate cuts this year. Is that going to shift? How are you guys looking at that?
Yeah, this is definitely something that's providing a lot of uncertainty for both investors and just business owners. Like, you look at things like the ISM manufacturing and the ISM services surveys, and at least half the comments from people surveyed were, from business owners surveyed, were about uncertainty around tariffs, disrupting the business, disrupting consumer spend, disrupting their supply chain. So it's real. That uncertainty has a real cost. And that could be something that does put some downward pressure on growth in GDP, particularly for the U.S. In the coming quarters. Now, the stated goals of the Trump administration, if you go listen to the Treasury Secretary Bessent, he's been giving interviews on some of the news networks, and he's basically saying, look, we want to prioritize Main Street, we want to put more activity back in the hands of the private sector, reduce government, and that may hurt overall growth in the short run, but ultimately we think it'll be good in the long term. So their whole thing is pain short term, gain long term. And of course, that sounds good, but that can create feedback loops in the economy, right? We know that even just a little bit of pressure in the short run can create markets selling off, which can then create businesses pull back on investment spend. You have, these feedback loops of effects that can take hold. And so not only that uncertainty, but the fact that they may be actively trying to hurt certain parts of the economy, particularly in the government sector with Doge and things like that, introduces, the possibility that we could see further downside. So I think we have to recognize that. And I think we're going to be in this period, like I said, for a while. And the tariff stuff is just a perfect example where you just have the flip-flopping going on. I think the way they're handling it, I certainly have some criticisms myself. Even if their goal is to, reduce government spending, increase private sector, you're not helping the private sector by constantly changing your mind about tariffs and creating these, huge one-off changes all the time. So that uncertainty is not good for business investment. It's not good for consumer confidence, and they've got to figure that out sooner rather than later, I think.
Well, the tariffs are essentially a cost to us, right? I mean, all that gets pushed down to the consumer. So
right.
It's like we just keep getting beat up. First it was inflation, and now it's tariffs, and it's a tax on us. So I don't think it's got a good look.
Yeah. And as far as the Fed is concerned, it's going to be really interesting to hear their comments at the March meeting here in a couple of weeks. We're still pricing in that the Fed is going to sit on its hands for March, and I think that's probably right. But it's going to be interesting to see if they shift their tone now with what's going on at the federal policy level. But they also previously said that tariffs are kind of a one-time bump up in costs for consumers. And so the Fed may be willing to look past that, even though it could be like short-term inflationary. They're willing to look past that because they know it can be deflationary on the back end. And so I don't expect them to change their course as far as reducing interest rates a little bit further this year. So that's my expectation currently. But, if it looks like they do want to be more hawkish than we expected, that's going to be even worse for the market. So I don't expect that, but that's something we got to watch out for in terms of their tone and language at the next meeting.
I think I'm with you. I don't expect that either.
Great insight, guys. As usual, I am just confused about the macro picture. I don't pretend to be an expert, and I just kind of follow your leads on it, and always appreciate your insights. You guys want to look at some TA?
Let's do it.
All right. So the last week has actually been very interesting. And granted, Nikki and I have been traveling across the country for a few days. And so the joke in the community is whenever I'm traveling, that's when the markets like to move the most. So that's actually what happened over the weekend. I was not expecting a Sunday move like we saw. But let's just talk about where we are right now, what happened over the last week, and what could happen going forward, right? So I think it's always interesting to like think about the macro and the, earnings picture and all that, and then like see what we can see in the chart. And what I'm actually surprised about is the fact that, the NQ as of right now is only about 10% off, or it was only about 10% off of that all-time high a few weeks ago. And as of today, the markets are trying to hold above that 200 period moving average. If we look over the last year or two, you can see we've had a few attempts to test the 200 period, and it's held up every single time. The one time that it did break below was back here in January of 2022, which that's where we had the extended bear market for about a year. Okay. And that was both in Bitcoin, crypto, stocks, a lot of risk assets. But right now, I mean, this could be just a regular pullback in a much longer kind of sustained bull market. Or if we snap below the 200, it could actually lead to another like 2002 type scenario. What I've been telling folks in the community is like just pointing out the direct correlation here. And this is actually something I tweeted out a bit as well, is like, look, guys, for anybody who's in Bitcoin, even if you're a Bitcoin maxi, like you cannot ignore the NASDAQ and the S&P if you want to have an idea of what's happening and why. Both the NQ and Bitcoin started their decline on the same day, and they have been very, very closely correlated over the last few years, both on the downside and the upside. I wish that wasn't true. I wish we could say that like Bitcoin is, trading more inversely or just uncorrelated, but that's not the case. And what happened for anybody that doesn't know, over the weekend, Trump announced on social media his strategic crypto reserve, and initially kind of forgot to mention Bitcoin, and then followed up and said, wait, I love Bitcoin too. And so a lot of Bitcoin folks got pissed off, and it's just kind of funny. I mean, obviously Trump is not a crypto guy. He's listening to David Sachs. He's listening to people around him. And he knows that, Bitcoin and other crypto folks made a very big impact on the election. And so I think this is a step in the right direction. We'll see what actually comes of it. But what I thought was super interesting was just the price action over the last couple of weeks. But before I give you my opinion, I wanted to ask you guys, like, what do you think about just overall market sentiment and how it reflects in the price action right now? Like, do you think it's accurate? Do you think there's a mismatch? Do you have an opinion at all? Or what do you guys think?
I mean, we've had from like peak to trough in the S&P, like only like a 4 or 5% correction so far. So at least on the stock side, it doesn't feel like we've had the correction that really matches how bad the sentiment has been. Like we got to an extreme fear reading on the CNN fear and greed sentiment indicator. We had, I think the AAII institutional investor sentiment is at its like 1 year high in terms of bearishness. So that would lead you to believe we've had a 15 or 20% correction in the markets, where we've had still a pretty small correction in the overall indices. Now, yes, a lot of the momentum stocks have taken a big hit. So when you look at some of the stocks out there, like, Palantir or Rocket Lab or Hims and Hers, some of the big high flyers that were up hundreds of percents in the last year, those have taken a pretty big hit. Kava would be another one. But, outside of some of the froth that got taken out, it hasn't been that bad yet. So I think, maybe in small cap land and in some of these momentum names, you can say there's been a significant correction, but it feels like I'm kind of like, what are we even talking about here? Give me a 10% correction and then we'll start talking,
Yeah.
The sentiment is very fearful though.
Yeah, it's almost like when did everybody like get really thin-skinned and just like lose all discipline and just let emotions take hold?
Yeah.
Nick, anything to add to that?
No, I agree. I was looking at the correction today and I was like, oh, 5%, this is nothing. This is easy, you know. But it does feel like there is a lot of fear pouring out there again. You know, the recession headlines are back, the Fed rate hikes are back. There's just people are just worried about the economy, and there are reasons to be worried, right? I agree with that, but I have had a bit of trouble kind of reading sentiment generally lately. So I guess I'm a bad person to ask because I have struggled with figuring out. Yeah, the readings are saying extreme fear and stuff like that, but yeah, I think the way price action's been acting the past few days, it makes a lot of sense that we've had a lot of intraday volatility off of the 200-day moving average. Like that makes a lot of sense to me. People don't really know what to do right now. And I think I share Travis's sentiment on that.
Okay, cool. I generally agree with you guys. And here's one thing that I wanted to point out. Okay, so going back to late January, there was a ton of euphoria, you know, just a month or so ago. It was like total euphoria. And I get it. Bitcoin was over 100,000. That's something to celebrate, right? And there's a difference in celebrating milestones and just getting so laser focused, no pun intended, on, you know, the bull case only. So I posted this. I said, what would you guys do if Bitcoin pulled back about 30% to close the CME gap around 75K? You know, there's a big gap that's still not quite closed, but we got real close to it. But I said, like, you know, what would you guys do? Just, you know, kicking this idea around, because this would be the second 30% plus retracement of this market cycle. And I could tell by the lackluster response that a lot of people just didn't really think about the bear case or the possibility that Bitcoin would go back below 100K. And to me, that's what the pain trade was, is like, all right, we got over 100K. Everybody's freaking out. They have FOMO. They want to get net long. You know, December was the all-time high of, you know, the meme coin super cycle, where you had all these idiots saying shit like, believe in something, don't trade, believe. That gives me 2021 vibes like nothing else, right? So when I started to see that, I'm like, all right, yeah, things are a little frothy. Let's think about the bear case, right? And that's what actually played out. Was Bitcoin has pulled back and did about a just shy of like a 30% pullback. And last Friday, we came inside of that gap. We didn't quite technically close it, but it was very close. And then what happened, if you look at spot, you can see this a little more clearly. So I actually started kind of averaging down into that dip. I bought some on Friday, or no, what was that, Wednesday? And then I bought some more on Friday. So I was scaling in, trying to get fills as close to that 200 period moving average as possible. And then as I'm driving across the country, in the middle of nowhere, my phone just starts to go bananas. And I'm like, what's happening? It's Sunday. Like, why is everybody pinging me? And what happened was on Sunday, Bitcoin shot up over 10%. And you had, you know, other shit coins like Ripple and Cardano and stuff like that that were up even bigger because Trump had initially tweeted and mentioned those. And so what that did is it created another massive gap up. It was like a 12% gap up on Sunday for CME futures. And then you can see Monday's candle actually came all the way back down and basically closed like kind of almost flat on the day. So that's why I say, like, you know, the best case scenario for Bitcoin from a TA standpoint is you actually want weekends to kind of be boring. Otherwise, if you have these massive moves over the weekend, it actually creates a problem for market open on Monday, where a lot of algorithmic traders and big funds and professionals are going to try to close those gaps. And so the worst thing that a trader could have done is like woken up on Sunday when everything was going nuts and go, yeah, I'm going to buy after Bitcoin's up 10%. Again, this is a prime example of when it makes the most sense to buy into panic, buy into that fear, buy at support when nobody wants to buy, and then either take profit into those big kind of green candles, or just don't add and mess up your risk to reward. So that's kind of my take on what happened and why we had all this volatility. And then as of right now, you can see, just over the past couple of days, bulls have been trying to hold up price above this 200, but we've got like this wedge forming where we've got the 21 period moving average as resistance, and we got the 200 as support. So I posted in Discord today that we've got this like new consolidation range kind of forming. But the other thing prior to all this, when this 92K zone snapped, you can see that Bitcoin really likes to move from like major area to major area. So this price action to me is still very beautiful. Like it's very clean. It's easy to understand what's happening and why. But if you are emotional and you're just trying to like throw market orders in based on bad or good news, you're probably going to be on the wrong side of the market. So right now actually is a time where it does take discipline, it takes an understanding, and it takes contrarian thinking to get good risk to reward on your entries.
Here's where I'm struggling with Bitcoin's price action. I feel like the move will not be complete until we hit 74,000. Like, I know we're holding the 200 and that looks pretty, but I don't know. When I look at the daily chart, I'm like, and when I'm looking at the S&P 500 too, because I'm trying to think, okay, what are we doing from here? Are we just going to consolidate? Are we going to, bounce and then get another leg down into a little bit more bleeding and panic that the market wasn't expecting? Because you're right. Nobody was expecting Bitcoin to do what it's doing. Everyone thought it was going to hold 100K, maybe even break through 100K again. S&P 500 felt like it could do no wrong, So I still continue to feel like the contrarian viewpoint would be lower from here almost. That's kind of where I'm leaning.
I agree with that. Like I'm by no means calling this the low. It certainly could be, but let me just actually pull up this tweet that I sent that kind of recaps, because I was off of social media for like a week, and I just kind of recapped. I said, there's FUD everywhere. If you look at any headline, it's 99% FUD and fear. And there's a lot of correlation. Bitcoin and stocks are directly correlated. And there's massive gaps. These weekend moves are not great for retail traders. And it just causes like a weird risk to reward balance. We had if you want to call it like a white swan Trump announcement, kind of like it is positive news, but they kind of botched it. Meme coins getting destroyed. So you've got some really positive things. You've got some negative things. It's definitely a mixed bag. And we're at that 200 period moving average of support. Here's what I did. And again, this isn't financial advice. This is just what I did and what my thoughts are. There's a reason why I took some profit at 100K, right? I scaled out of it. It wasn't huge. It was like 7% of my cycle trade. So I've still got a pretty heavy bag. But I said I was taking profit there to basically free up cash to be able to buy lower or buy on a breakout. So I bought the dip, and I'm prepared to get more if we either, one, Nikki, like you said, actually close that CME gap and get, into the lower 70Ks, which would also kind of be a retest of the market highs prior to the US elections. Or even if we go into an extended bear market, like I welcome that too. I think the odds are, just based on the market cycle, that 2025 closes green, right? Because in the prior market cycles, the third green year in a row has been a kind of a either a parabolic green year or a pretty big green year. So if price can recover and get back up above this 92K again and go green on the year, I think the second and third and fourth quarters will be bullish. that there's no guarantee to that, right? And certainly I think the most important thing is that the stock market holds up, because if that collapses, I think Bitcoin's going with it. I don't think Bitcoin can buck the trend. If it does, great, and we'll have time, we'll see signs of that. But even as somebody who has a pretty large Bitcoin position, I'm looking to stocks to be the guide.
Yeah, I think that you're right on the money with that. I mean, it's a risk asset. Let's be real. It's going to behave. I mean, everything gold could come down too.
Gold's actually been the only one kind of showing relative strength.
I know. It's
don't tell Peter
killing
Schiff, but
yeah.
I mean, it's slow and the returns aren't nearly as great as Bitcoin, but yeah, it's actually been holding up closer to all-time highs. What do you guys think? Is the gold in Fort Knox, or did somebody drain the coffers? No comment?
I mean, I hate to say it, but I don't know if it's ever been there.
Ooh.
I mean, I don't know. I just, with the way the federal government has been run and the things that we've learned about, the ways that they've
Come on, man. They won't lie to us.
Man, I don't know. I'd honestly bet that it's a greater probability that there's significantly less there than the other, which is that it's all there and everything's chill and nothing weird is going on. Like, I don't know. Maybe it's just the loss of confidence in our own government over the last decade. But yeah, I just
I mean, Occam's razor would say that it's probably there, right? That for anybody that doesn't know, after World War II, because we got a lot of the gold, that's what created the baby boomer generation and the boom of the middle class, right? And so, yeah, in the 70s, we got off the gold standard and things went to hell from there. But where would the gold have gone? That's my question.
Yeah, and that's an interesting question for sure. Like, could it have been laundered out? Like, could it? Yeah, I mean, I don't know. The other question for me is like, how does the market react? Is there a big gold spike up? Is it, do treasuries sell off? Like, what's the market reaction? Because that would be interesting. And the fact that there's like they're just not, they're not auditing it. Like, they're not allowing people to just, the high level officials to walk right in. I don't know. It sort of just tells me something, right? Like, I don't know. It feels weird. I guess it's a military base, but like, it should be fairly easy for, the head of the executive branch to be able to walk in there anytime he wants, right? I mean, I don't know. It just,
why wouldn't they instill that confidence, right?
Yeah.
And so at the end of the day, it's like, no, we can't trust the government. The only thing you can really trust is a public ledger. So yeah, I think Bitcoin is a great option to possibly be like gold 2.0 for the US and maybe spur another economic boom, kind of like in the 50s and 60s. But then, it's weird because we've also got some like, kind of public figures in the Bitcoin space that are saying a Bitcoin reserve isn't necessary or even good. Nick Carter wrote a piece over the last few days, I think, that, was making that argument, which I don't think I agree with, but I don't know. And we've also got other, smart guys like Colin Roach that also are being public saying it doesn't matter and the US can just print dollars. Like, what do you guys think of that?
Yeah, I mean, I think there is an interesting question around how do you fund the reserve, and there's various ways you could at least bootstrap it, and start one, which is, take the confiscated holdings. That's an obvious way. Take some investments from elsewhere, but convert gold, whatever those things may be. But there is a bigger question. If you want to grow that significantly over time, and you're a nation that already has a massive budget deficit, like, where does the capital come from, to build the reserve? Which I think is a question that hasn't been like adequately answered yet.
You sell treasuries, duh.
Dude, you do the sailor approach, and you do what the US does best. You print a bunch of dollars and you send us into
print
chaos.
The money. Yeah, they're buying it off debt.
I think that was part of the thing that Nick Carter was saying in this opinion piece was like, it would basically kind of kill faith in the dollar, which I don't know if we need Bitcoin to actually make that happen, but
Yeah, I think it's sort of like counterproductive, right? Like if you're going to end up, weakening the ability for, yeah, I mean, the purchasing power of the dollar, if you're going to, create concern and even more worry about the budget deficits and the debt and, treasury yields and things like that, then, if your asset over here in Bitcoin is increasing at the same time, like it's counterproductive, right? So yeah, I don't know. How do you do it in a way how do you fund it in a way that is productive and doesn't like cast further doubt on the finances of the government? And I think maybe there could be ways, right? Like maybe you take money that's seized from cartels. Maybe you with other agreements with other countries when there's a tit for tat. Like maybe you have them deposit Bitcoin for help with aid, military aid, or things like that. So there's ways that we could earn it, so to speak, that would be interesting, I think. But I do think, like you said, Chris, like, I mean, I think Bitcoin, by virtue of, having the publicly traceable ledger, is an advantage and an upgrade over gold. Like if that gold is not sitting in Fort Knox, imagine, I mean, how bullish of an argument that is for Bitcoin. I mean, that's just another leg in the stool there. So I think that's an interesting point you make about that even potentially strengthening Bitcoin's role just globally. So that I think is an interesting part of the story as well. So yeah, I don't know. The reserve is interesting, but I still feel like I need more details on how they want to build this thing. And like, I'm not sure including Cardano in it is really the best use of capital.
Yeah. Anytime I mention Cardano or X or like one of these other competitors, like people just, the cult just jumps all over me. So I'll just mirror my opinion and everybody can believe what they want. I think gold is an asset class of its own. And I think the US is acknowledging that, and they are going to classify it as something different than all these other, I call them shit coins, whatever you want to call them. I'm not a hater. I'm saying they're venture level risk, right? They're just as risky as any other startup, and Bitcoin is not. That's my only opinion. Some of these alts are more scam like than others based on fundamentals and manipulation and shit like that. And yeah, I do question, does the US government actually need to hold these things? Like would the US government need to hold a bunch of penny stocks? I don't think so.
Perhaps it's just a way for the administration to implement it and say, hey, we're crypto friendly. And it's more so that narrative of America is crypto friendly and crypto first. And that's what they're trying to accomplish more so than anything.
I think they're maybe trying to appease all the crypto donors.
Yeah.
Oh.
Yeah.
Yeah.
It makes sense. It does make sense through that lens why they would be implementing it that way. But yeah, I don't think if you were to draw it up in a truly like nonpartisan fashion, like I don't think you'd want all the other venture projects, as you said. That's a nicer way of saying it.
Yeah. I mean, most of them are going to fail. So why does the US need to hold fund tokens?
Yeah.
And on that, everybody hit dislike this video if you disagree.
Hey, we need fart coin in there. All right.
That's right, man. Oh, dude. Okay.
How's old fart coin doing, by the way?
Oh, it's been demolished. I was talking to a buddy that had a pretty large position in fart, and he was like, yeah, man, I probably held a little too long. It's like, it's okay, dude. There'll be another trade. It's right around the corner.
There we go.
Yeah. No, I'm actually still excited for the potential of like bull market round 2 in Qs, 2, 3, and 4 of this year. So the big analogy, I've said it 100 times on the show, I'm going to repeat it, is think of crypto as one big party, and the stock market. I mean, they're kind of the similar in that, all the smaller cap cryptos and stocks are like the ravers and they're partying. And the DJ is Bitcoin, kind of determining the mood and if the party's, really bumping or not. And then the NASDAQ and the S&P 500, they're like the fire marshals. They get to, have final say, like, is this party actually going to continue or not? And if the NASDAQ crashes by 50%, I doubt the DJ, aka Bitcoin, is going to keep playing the music. So that's my analogy. I think it's accurate until proven wrong.
I
I'm
have a
looking forward to
question.
being wrong, actually.
Do you guys think that DraftKings earnings growth could be a good measure of what the economy is doing?
Did
Because
they
like
blow it out? What I didn't notice.
I mean, their earnings growth rate has been on the decline after being crazy high. But
Mhm.
I'm just like, I was looking at that and I was looking at DoorDash. I'm just trying to find the names that are like truly, if these names start to deteriorate and the growth really starts to deteriorate, that's the sign that the economy is really in trouble.
Mm.
I do think DoorDash is a very interesting barometer of, the consumer, in the sense that, like, when you have, very, very strong growth continuing, then you it's clear that there's at least a larger class of consumers that, are willing to keep spending on food delivery, which I see as, a pretty pricey product overall. It's convenience, but it's also, it comes at a significant price. So if you see big pullbacks in demand there, that would indicate some consumer concern or pullback. DraftKings, I don't know, it might be more risk taking on DraftKings, like more like kind of similar to what we see in meme coins and stocks. Sports gambling I see as kind of similar, where it's like, yeah, this is a measure of risk appetite and animal spirits, more so than, just general. I mean, obviously it does correlate somewhat with consumer income, but I would think
I mean,
DoorDash
if you're
would be a more
broke,
direct.
Well,
if you're
isn't
broke, are you really YOLOing sports bets still?
Well,
Maybe
You'd
you
be
are.
surprised. You'd be surprised. Yeah.
I wonder if the other side of the coin is that, during recessions, vices, they go up, right? Like alcohol sales and things like that.
Mhm.
Like, I almost wonder if in a bear market or a recession, if people get more desperate and actually gamble more. I wonder if, like, do lottery tickets go up like sales go up in a recession?
That's a good
Now I
question.
want
We
to
should
look into
ask
that.
old
Yeah, I've never looked at that. I mean, I
ChatGPT
remember
or
hearing
something.
like, yeah, alcohol sales and drug use goes up in a recession, and I'm almost wondering, like, do like degens actually gamble out of desperation more in a recession, or is it like, no, we don't have the money, so we're going to be responsible? I would bet the former.
I have heard Vegas is in a slowdown.
Mm.
I don't know if you've heard anything about this, but apparently Vegas is like not doing so hot right now.
I've seen some anecdotal comments on Twitter about that, but when I looked at like MGM's fourth quarter, like it was a record quarter. Maybe things shifted all of a sudden in January, but they had a record quarter, although revenue wasn't growing that robustly on the top line. So I guess yeah, I mean, I guess it's one area that I've seen anecdotal reports about is that traffic's decreased because they took price too much in the table. And I kind of agree. Like when I would go the last time or two, I looked at like the minimum table bet size and things like that, and some of the prices on the food. And I was like, man, sticker shock. Like Las Vegas, some things have always been a bit expensive, but it was pretty shocking to see like, so, an entree for like $90 at a, pretty basic restaurant, or like a minimum table bet size of $50 for blackjack. It's like, wow. Okay.
Yeah, I've heard people mirroring that sentiment. So maybe the value prop is becoming less affordable.
Yeah.
Hmm. All right. Well, what are you guys looking forward to next week? What do we, or I guess, yeah, just over the next 5, 10, 15 days, and it's kind of hard to predict because it's like every day we're having big swings. So it's something where I know we've had a lot of activity in our wealth building community, and, people just either staying very disciplined and cool, calm, and collected. I sent a survey out both on Twitter or X and in our Discord, and I said, how are you feeling? Either I'm panicked, I'm confused, or I'm confident. And it's like on X versus our community, it was kind of inverse. Like everybody on X was freaking out, and the majority, I think it was 85% of people said they're cool, calm, and collected in our Discord. So that I was very happy to see. But yeah, it changes day by day. Market sentiment, one day we're euphoric and we're, hey, we're going to the moon. The next day it's all over, right? And yeah, I think one thing is going to be true is over the next several weeks and months, we're going to see heightened levels of volatility. That's my prediction. What do you guys think?
Yeah, I agree with that. We're kind of working our way out of earnings season on the stock market side. So for the next 4 to 6 weeks, it's going to be like macro driven, price action driven, headline driven. And frankly, what we see right now with all of that is just a ton of chop and uncertainty and volatility. So I think we're likely to stay in that. We've got the unemployment report on Friday, a Fed meeting 2 weeks from today, more inflation data coming out. I'm sure we'll see a lot more Trump admin headlines. So it's going to be a roller coaster. I don't think we're in a just stair step higher environment right now. So, yeah.
Yeah, feels like it's gonna be hard for the buyers to really drive this market right back up from here. I don't really see that as a high probability scenario. Kind of like I mentioned earlier, I think where I'm leaning is maybe we bounce and then we see one more leg down in, all the major risk assets, Bitcoin, the major indices. That's kind of where I'm leaning. So I think we're at a big inflection point we're either at a huge inflection point we're heading lower, or we're in for just absolute boring price action in the indices. But under the surface, there's a lot of exciting stuff going on with individual stocks. So lots of names moving big drawdowns from the highs. So, I know we're hunting. I know, Travis, you've been making moves in your portfolio. I'm about to be making some moves in mine soon. Just kind of trying to gauge where we're heading from here, if we're going to consolidate or head lower.
Okay, I'm going to take the other opinion, and I'm going to say that now we've had a little pullback. I think the pain trade is to the upside. I think that the odds are pretty good that we get a V-bottom bounce here and rip faces off and leave everybody feeling like, oh shit, I didn't buy the dip.
Oh,
That's where I think the pain trade is now.
okay.
Now that you voice it, it does make some logical sense. That would be the pain trade. There are some positives out there. We could get this GDP now stuff, for instance. We could get some upside surprises as data normalizes in February, March. We could get the impact of lower rates flowing through. Maybe the Trump stuff calms down. I don't know, but
see, you like value-based people, you guys that care about like good value and earnings and things like that. You're waiting, right? I know Nikki's been like, damn, can we get a deeper pullback? What if we don't? And what if the pain trade is just on the upside and it's like things stay expensive and then Bitcoin rips to 120 plus? I don't know.
But
I'm gonna take that side.
I don't think most people are waiting for lower and wanting lower. I think most people are like, oh my God, it needs to bounce here, otherwise I'm going to die. Like that's where I think most people are living, especially Bitcoin people. They're probably it needs to bounce here. It needs to bounce here. So
I've definitely
don't know.
seen the memes. There was one meme where it was like a girl like, I wonder what he's thinking about. And then the guy sitting on the couch like, I need my coins to bounce from here or I'm freaking screwed.
Exactly. So I'm gonna stay on the opposite side of you, Chris. We'll reconvene.
Okay.
Next show.
One thing.
See what happens.
Wait a minute. No matter if we go in bull or bear market, one thing that I've been saying for a long time that I think is still true is I think Bitcoin dominance is going to continue to climb back up into the high 60s. So we had that pullback. We had like a real short altcoin season here. I think that we would see capitulation in memes and alts if this thing got, into the 64, 65% again. I think we'd shoot up to like 69 to 71%. So basically what that means is like Bitcoin could go up and alts stay flat to down. Or if we go into a bear market, alts would sell off more than Bitcoin. So that's one thing that I have a lot of conviction about. I could be wrong, but that's something I think is going to happen.
I do want to follow up and make something clear, though. If we do see lower, I do think that that's where the V bottom comes from and we're back fast. I think that the dip's going to get bought fast if we go any lower from here on Bitcoin and the indices. So I do want to mention that part. Just because I'm thinking we're going lower doesn't mean we're staying lower, in my opinion, because I just don't think the data is screaming recession yet, even with everything we've seen so far.
All right. Well, we'll see in the next show. I'm sure a ton is going to be different by the next time. So
I know, right?
Yeah.
It'll be interesting.
All right, guys. Trav, Nikki, thanks for all your input. And we should do some questions next time. We haven't done questions in a while, so we'll do a call for questions next show. So
yeah.
Thank you guys for watching. Please like this up if you agree. If you disagree, let us know in the comments. Tell us what you think is going to happen and why. And make sure you're subbed to the audio podcast anywhere that you listen to a podcast. Leave us a review for good karma. And we'll see you guys next time. Take care.
See ya.